I want to get to the other piece of this, which, the other goal of Fed policy was basically to lower wages and slow down the labor market. There was lots of angst in the corporate world about the quote unquote tight labor market. Let's go ahead and put this up on the screen. It looks like those policies are just starting to bite. They say, this is from the New York Times, less turnover, smaller raises, hot job market might be losing its sizzle. Unemployment is still low and hiring is strong, but there are signs the frenzied turnover and rapid wage growth are abating. Let me read you a few of the facts that they have in here. They say Americans in July quit their jobs at the lowest rate in more than a year. That's a sign that the period known as the Great Resignation might be nearing its end. Wage growth, which soared as companies competed for workers, has also slowed, particularly in industries like dining and travel, where the job market was particularly hot last year. Now, one clarification on that point, what they call nominal wages, yeah, those grew. They did not grow as fast as inflation did. So on a real level, in terms of what you're able to buy, wages have been going down. I think it's really important to keep that in mind. But even that nominal wage growth is now slowing. You have them saying that more broadly, many companies around the country saying they're finding it less arduous to attract and retain employees. Many are paring their hiring plans, partly because the pool of available workers has grown as more people come off the economy's sidelines. And then you have, some companies being a little bit too direct here and basically cheering for this situation, and companies being able to gain what they call the upper hand again. This is the chief financial officer at Expedia who told investors, quote, "Not that I wish ill on any people out there from a layoff perspective or whatever else, but I think there could be an opportunity for us to ramp some of that hiring over the coming months." You had another chief economist at ZipRecruiter say workers and job seekers are feeling just a little bit less bold, a little more concerned about the future availability of jobs, a little bit more concerned about the stability of their own jobs. All of this, again, is the goal of the Fed, and also will, make it much more difficult for the grassroots labor movement that we have covered in depth here to continue to notch gains and organize new workplaces as they've been doing.
Yeah, no, I think that's correct, Krystal, unfortunately, which is that the tightening of the labor market that we have, the tightening that we had, which enabled some of this, is just getting eroded, which is the explicit goal of raising interest rates, of increasing unemployment. And I just see a confluence of crazy factors, almost like we had in the Great Depression. At that time, we had not only chaos here at home and international chaos abroad, including the prospect of war, annexation, and all of that, we also had insane fiscal policy by the heads of the 4 largest central banks, which contributed to prolonging the crisis. And I just think that we cannot get away from how ideology in the moment is possibly ruining and accelerating some of these social trends, which that we thought were very beneficial, and B, can reverse really on a dime. It doesn't take too long for people to get in some desperate straits. Having read some histories of the Great Depression, 1929 was a great year. By 1933, you had Hoovervilles, you had debt collectors being shot in the middle of cornfields, you had literal uprisings where people would hold hostage, foreclosure events, near communist revolutions. It got real bad real quick. And I just don't think that people can underestimate how quickly this, veneer of our economy, we got a taste of it in 2008, but it could be so much worse, especially when you add global conflagration up on top.
That is so true. Yeah. And by the way, we're not the only ones who are sounding the alarm here. The UN is now saying, hey, slow your roll here, guys. Let's go ahead and put this up on the screen. The UN is calling on the Fed and other central banks to halt interest rate increases. A UN agency warns further policy tightening risks a global economic downturn. And the really important thing to understand here is that it's not just the Fed tightening. You have wealthy economy central banks around the world that are tightening at the same time. These effects can compound very quickly. There is a lag between when interest rates are hiked and when you see the fallout economically. So in the same way that we had this massive supply chain shock shock because of the pandemic and also exacerbated by the war in Ukraine. They're saying all of these banks tightening at once could have a similar compounding disastrous fallout effect that, first and foremost is going to devastate the global south and poorer countries. But, we're all connected here, so it's not like we're insulated from the fallout from global economic turmoil. One of the quotes here that you have from the guy who was in charge of the team that wrote the report, he says, "Do you try to solve a supply side problem with a demand side solution? We think that's a very dangerous approach." Now, to take that out of econ speak here, the reason we ended up with this inflation was all of these supply shocks. Raising interest rates doesn't deal with that whatsoever. This is something, Elizabeth Warren, to her credit, when she asked Jerome Powell, hey, raising interest rates, is that going to help with gas prices? He's like, no. Is that going to help with food prices and supply issues? No. So then what's the point of the policy? Ultimately, that's what they're pointing to here as well. They say rather than increase rates, which will do little to ease shortages of energy and food, policymakers should focus on measures that target price spikes directly, including price caps funded by one-off taxes on the unusually large profits being made by many energy companies. So that is there's a particular issue here that we covered when we were talking about how the dollar is so strong relative to every currency around the world. This really can trigger sort of cascading effects, especially for poorer nations that have a lot of debt that is dollar denominated. In a lot of ways, because our currency is so strong and theirs are weak, that means their imports are much more expensive for them. That fuels their inflation. That makes it more difficult for them to service their debts and can trigger these cascading effects that lead to the global severe recession that the UN is warning about here.
Yeah, I mean, it's pretty interesting in order to watch it all play out. I think the UN warning will probably fall on deaf ears. All of the European banks are all signaling they're only going to continue to hike, including us. All eyes on the next inflation report. I think it's still going to be bad. And I'll tell you, it's the same reason that it was bad last month. You can have gas prices already have flatlined and are now starting to go up. So that's not going to benefit the inflation top line. And guess what? Shelter prices take 6 to 8 months to lag in an economy. And I think they're just going to continue to go up, which means that the top line number is going to be high. And it's not like food has gotten cheaper. Anybody who's been to the grocery store can tell you that right now.
Cable news is ripping us apart, dividing the country, making it impossible to function as a society, and making it impossible to know just what is true and what is false. But the good news is they are failing and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world.
So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.